What if I told you there are AI companies trading for less than the price of a cup of coffee that could potentially revolutionize entire industries? While everyone's talking about the big names in artificial intelligence, there's a hidden world of penny stocks that most investors are completely overlooking. Today, I'm breaking down 5 AI penny stocks, all trading under $1, and some of them are trading for fractions of a penny. But before we dive in, let me be crystal clear about something important. This video is for educational and entertainment purposes only. I'm not a financial advisor, and nothing I say here should be taken as financial advice. Penny stocks, especially those under $1, are extremely high-risk, highly speculative investments. They're volatile, they can be illiquid, and you could lose every single dollar you invest. These are not get-rich-quick schemes. Only invest money that you can genuinely afford to lose completely. If losing that money would affect your ability to pay bills, feed your family, or sleep at night, then penny stocks are not for you. Always do your own thorough research before making any investment decisions. Now that we've got that out of the way, let's talk about why AI penny stocks are even worth discussing. The global artificial intelligence market is currently valued at over $280 million and is projected to grow at a compound annual growth rate of nearly 36% through 2030. That's explosive growth, and while the big players like Microsoft, Google, and Nvidia are getting most of the attention, there are smaller companies trying to carve out their own niches in this massive market. Some will fail spectacularly, but a few might succeed beyond anyone's expectations. That's the gamble with penny stocks. So let's get into these 5 companies and see what they're all about. First up, we have GBT Technologies, trading under the ticker symbol GTCH. Now, when I tell you the current price, don't let it shock you. This stock is trading at approximately $0.0002. Yes, you heard that right. Not 2 cents, not 0.2 of a cent, but 0.02 of a cent. This is what we call a sub-penny stock, and it's about as speculative as investing gets. So what does GBT Technologies actually do? The company is focused on developing AI-enhanced microchips and Internet of Things infrastructure. Their technology is aimed at real-time data processing for some really interesting applications, including medical wearables, smart navigation systems, and drone control systems. Think about the future of healthcare. Wearable devices that can monitor your vitals in real time, predict health issues before they become serious, and communicate instantly with your healthcare providers. That requires incredibly sophisticated chips that can process vast amounts of data while consuming minimal power. GBT is working on technology in this space. They're also developing systems for autonomous navigation and drone control, which are massive growth markets. The company has been building a significant patent portfolio around AI chips and IoT processing, which could be valuable intellectual property if their technology proves viable. But let's talk about the elephant in the room. When a stock is trading at 0.02 of a penny, that's the market telling you something. It means there's extreme skepticism about the company's ability to succeed. The risks here are enormous. First, there's the question of financial viability. Can this company actually bring products to market? Do they have enough cash to continue operations? Then there's the liquidity issue. Stocks this cheap often have very low trading volumes, which means you might not be able to sell your shares when you want to. And finally, there's always the risk with penny stocks of dilution, where companies issue more shares and reduce the value of existing holdings. GBT Technologies represents the highest risk, highest potential reward scenario on our list today. Moving on. Our second stock is GuardForce AI, ticker symbol GFAI, and this one's trading at a much more reasonable 87 cents. Still under $1, but we're talking about actual cents here, not fractions of fractions. GuardForce AI is based in the Asia-Pacific region, and they're doing some really interesting work in AI-powered robotics and smart technology. The company operates in 3 main segments. First, they provide robotic solutions with AI integration. Think security robots, service robots, robots that can patrol facilities, detect anomalies, and respond to situations without human intervention. Second, they're developing smart retail solutions, which is huge in Asia right now. We're talking about AI systems that can analyze customer behavior, manage inventory intelligently, optimize store layouts, and create personalized shopping experiences. And third, they provide traditional security services enhanced with AI capabilities. What makes GuardForce interesting is that they're not just developing technology in a lab somewhere. They're actually deployed and operating in real markets, particularly across Asia-Pacific. The company has reported strong quarterly growth, which is always a positive sign. It shows that there's actual demand for what they're selling. Asia is also leading the world in adoption of robotics and smart retail technology, so GuardForce is positioned in the right geographic market. The smart retail market alone is expected to grow massively over the next decade as brick-and-mortar stores try to compete with online shopping by offering experiences that e-commerce simply can't match. However, there are risks to consider. The company's concentration in the Asia-Pacific region means they're heavily exposed to economic conditions in that part of the world. If there's a recession or economic slowdown in Asia, it could significantly impact their business. The robotics sector is also becoming increasingly competitive, with both established tech giants and innovative startups all fighting for market share. And at 87 cents, while this stock is much less risky than GBT Technologies, it's still a penny stock with all the volatility that comes with that territory. But if you believe in the future of AI-powered robotics and smart retail, Guardforce is one of the more established players in this space that you can access for under $1. Now let's talk about our third stock, Remark Holdings, ticker symbol MARK, currently trading at about $0.004. Yes, we're back in the sub-penny territory, which again tells us this is extremely high risk. But Remark Holdings has something really interesting going for it that the others don't. They recently announced a collaboration with Google Public Sector. Let me repeat that. Google, one of the most valuable companies in the world, has partnered with this penny stock company. So what does Remark Holdings do? They specialize in AI and computer vision solutions. Computer vision is one of the most exciting and rapidly growing areas of artificial intelligence. It's the technology that allows machines to understand and interpret visual information from the world around them. Think about all the applications for this technology. Security systems that can identify threats and unusual behavior. Retail analytics that can track customer movement and engagement. Smart city infrastructure that can manage traffic, detect accidents, and optimize urban planning. Manufacturing quality control where AI can spot defects that human inspectors might miss. Healthcare imaging where AI can identify diseases and scans faster and more accurately than ever before. The possibilities are nearly endless, and Remark Holdings is positioning itself right in the middle of this revolution. The Google partnership is significant because it provides validation. Google doesn't partner with just anyone. This collaboration is specifically focused on accelerating computer vision AI innovation. And Google Public Sector means they're likely targeting government and public infrastructure applications. Government contracts can be incredibly lucrative and provide stable, long-term revenue streams. However, and this is important, a partnership announcement doesn't guarantee success. We don't know the terms of this partnership. We don't know if it will lead to actual revenue. And we definitely can't ignore that this stock is trading at 0.4 of a penny. The market is still extremely skeptical despite the Google news. The risks with Remark Holdings are substantial. The company's financial history is something any potential investor would need to research thoroughly. How much cash do they have? How long can they operate without additional funding? Are they profitable or burning through money? These are critical questions. The stock price suggests the market believes there are significant challenges ahead. But if the Google partnership leads to real contracts and revenue, and if their computer vision technology proves competitive, this could be one of those rare penny stock success stories. It's a massive if, but that's what makes it intriguing. Our fourth stock is QTech, trading under ticker symbol CTK. This one's a bit unusual because different sources show the price ranging anywhere from 34 cents to 91 cents, which tells you something about the volatility and liquidity of these penny stocks. For our purposes, let's consider it somewhere in that range, still safely under $1. QTech is a Shanghai-based mobile internet company, and they're doing something different from the other stocks we've discussed. They're not building chips, they're not deploying robots, and they're not selling to governments. Instead, they're focused on AI-powered consumer applications. Specifically, their flagship product called TouchPal Smart Input. If you've never heard of TouchPal, you're not alone, at least not in Western markets. But this AI-powered keyboard and input application supports multiple languages and has over 100 million users globally. Let me emphasize that, 100 million users. That's not a promise of future users or a projection. That's actual people already using their product right now. In the world of penny stocks, having a real product with a massive established user base is incredibly rare and valuable. The app uses artificial intelligence to predict what you're typing, suggest words and phrases, support gesture typing, and work across dozens of languages. It's particularly popular in Asian markets where complex character-based languages benefit enormously from intelligent input prediction. What makes QTech interesting as an investment is that they've already cleared the biggest hurdle for any tech company, which is user adoption. They've built something people actually want to use. The question now is about monetization. How effectively can they turn those 100 million users into revenue? Mobile apps typically monetize through advertising, premium subscriptions, or data partnerships. The AI-driven keyboard space is competitive with players like SwiftKey, which was acquired by Microsoft, and Gboard by Google. But there's room for multiple players, especially in markets where Western apps face regulatory challenges or cultural barriers. The risks with QTech include the fact that they're a Chinese company, which comes with its own set of considerations, including regulatory uncertainty, geopolitical tensions, and potential delisting risks if US-China relations deteriorate. The mobile app market is also extremely competitive, and consumer preferences can shift rapidly. An app with 100 million users today might struggle to maintain that user base if a competitor launches something better. Monetization in the free app space is also notoriously difficult, but compared to some of the other stocks we've discussed, Kutech has the advantage of being a real business with real users, generating real engagement. That's worth something in the penny stock world. Now, before we wrap up, I want to mention a fifth company that technically doesn't qualify for our under $1 list anymore, but it's worth knowing about because it recently crossed that threshold. The company is Inuvo, ticker symbol INUV, currently trading around $2.56. Why am I mentioning a stock that's over $1 in a video about stocks under $1? Because it illustrates something important about penny stock investing. Inuvo was trading under $1 not that long ago. Investors who got in at those prices have seen significant gains. It's also a reminder that stocks can move quickly in either direction. Inuvo operates in the AI-driven marketing and advertising technology space. They've developed something called the Intent Key AI platform, which uses artificial intelligence to understand consumer intent and deliver more targeted, effective advertising. In a world where digital advertising is increasingly important, but also increasingly noisy, companies that can help advertisers reach the right people at the right time with the right message have tremendous value. Inuvo represents a slightly less risky option than the sub-dollar stocks we've discussed. It's more established, it has actual revenue, and it's proven it can grow its stock price. If you're interested in AI penny stocks, but the extreme risk of sub-dollar stocks makes you nervous, looking at companies in the $1 to $5 range might be a better fit for your risk tolerance. So let's take a step back and look at what we've covered. We have 5 companies operating in completely different segments of the AI industry. GBT Technologies is working on AI chips and IoT infrastructure. Guardforce AI is deploying robots and smart retail solutions. Remark Holdings is developing computer vision technology with a Google partnership. Kutech has 100 million users on their AI keyboard app. And Inuvo is using AI to revolutionize digital advertising. This diversity illustrates just how broad the AI revolution is. It's not just one thing. It's touching every industry, every sector, every aspect of our digital and physical lives.